Hello viewers, welcome to my channel. I am Hasham. So this is the last and final video on consignment accounts. Already 16 problems I have completed till the last video. 17th, 18, two more problems I am going to complete in this last and final video on consignment account. So if you have watched all the earlier videos, now you are in a position to attempt the problem on consignment. All different issues we have seen in consignment accounts regarding the preparation of ledger accounts in the books of consignor and the ledger accounts in the books of consignee. All different issues we have discussed in the last videos. So if you are joining now, I suggest you to go to the playlist of my channel. Select the subject Financial Accounting 2. Select the topic of the video Consignment Account. Watch the initial videos. Definitely you will get a good command. Then only you can be able to understand these final problems. So now I am going to read out the 17th problem. So before starting the problem, I expect as usual my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, keep it ready and start watching this video. 17th problem. Ramesh Oil Mills Company, Oil Mills Bombay consigned 40,000 lbs, that is pounds, 40,000 pounds of castor oil in 10 pounds tins. That means each tin consists of 10 pounds. The total number of pounds sent are 40,000 pounds in the tins of 10 pounds each tin. To B.N. Chatterjee, Calcutta. On 1st April 2013, the cost of oil was rupees 2 per lb. And per pound 2 rupees. How many pounds he has sent? 40,000. So 40,000 into 2, 80,000 rupees is the value of the goods sent by consignor to consignee. 40,000 into 2. Now, the consignor paid 10,000 as freight and insurance. Then, during transit, 50 tons were totally destroyed. 50 tins. Each tin consists of 10 pounds. Each tin contains 10 pounds. So 50 tins means 50 into 10. 500 pounds of oil destroyed in transit. So each tin contains 10 pounds. 50 tins were destroyed. So 50 into 10, 500 pounds of oil were destroyed, for which the insurance company paid directly to the consignor 900 rupees in full settlement of the claim. Now, N. Chatterjee took delivery of the consignment on 10th April and accepted a bill drawn on him by Ramesh and Company for 20,000 for 3 months. That means as soon as the goods are received by the consignee has accepted the bill which is drawn by the consignor as an advance. So it is bills receivable for the consignor and bills payable for the consignee. 20,000. On 30th June 2013, B.N. Chatterjee reported that 35,000 pounds were sold at rupees 3 per pound. The expenses were as follows. Go down rent 400, advertisement 2,000, salaries of salesmen 4,000. So 4,000 plus 2,000, 6,400. So 6,400 are the total expenses paid by the consignee. Now 35,000. Actually, how many pounds were received? 40,000. 40,000 pounds are issued by the consignor to consignee. In the transit, 500 pounds were destroyed. So 40,000 minus 500. So 39,000. How much? 39,500. 39,500 pounds. Out of 39,500 pounds, 35,000 pounds were sold at rupees 3 per pound. Then expenses are given. N. Chatterjee charged a commission of 3% plus 3% del credar commission. So del credar commission is given by the consignor to consignee. That means if any bad debts arises, then the bad debt loss must be borne by the consignee himself. The consignor will not bear the bad debt losses because he is giving del credar commission. So 3 plus 3, 6% commission. He sold rupees 19 worth of oil, the remaining stock. So whatever remaining oil was there, that remaining oil he sold for rupees 19,000 to X and Company, who were declared bankrupt after 2 months and only 50 paisa per rupee was realized from them. That means 35,000 ponds have been sold by consignee at rupees 3 per pond. These are sold. Some remaining stock was there. That remaining stock also they have sold it for rupees 19,000 to XN Company. XN Company is one of the customer. To XN Company, the remaining stock was sold for 19,000. But unfortunately, XN Company have become insolvent, bankrupt. So the full 19,000 rupees cannot be able to be recovered by consignee. Chatterjee cannot be able to recover 19,000 because the customer has become bankrupt. Only 50 paisa in a rupee. 50 paisa in a rupee means 50%. 50%. So 19,000, 50%, you get 9,500. Only 9,500 rupees can be recovered. Remaining 9,500 bad debts. So this 9,000 bad debts, who should bear the loss? Consignee should bear. Because consignor has given del credar commission, so any bad debts arising, that will be borne by the consignee. So Chatterjee has to bear the loss of bad debts. How much? 9,500. How 9,500? 50% of 19,000. That's it. Now show the accounts in the books of both the parties, assuming that consignee paid the amount due by bank draft. So we are required to prepare the ledger accounts in the books of consignor and in the books of consignee. Assuming that the Chatterjee, consignee, has settled the account by paying the final amount. That's all. So it's not at all so difficult. Easily we can do it. First of all, consignor. Who is the consignor? Ramesh. Ramesh Oil Mill is the consignor. They will open two accounts, that is consignment account and consignee account. Who is consignee? Chatterjee. So consignment account and Chatterjee's account. Two accounts they will open. And consignee, Chatterjee will open two accounts, that is consignor. Who is the consignor? Ramesh. So Ramesh and company account and commission account. That's it. Now I'll explain. First of all, 40,000 pounds of oil were given by the consignor to consignee. The cost of each pound is 2 rupees. So 40,000 into 2, 80,000 is the cost of goods sent on consignment. So what is the entry? Consignment account debtor to goods sent on consignment. So consignment account debit side to goods sent on consignment, 80,000 over. Now consignor has spent expenses. How much? 10,000 rupees. Entry will be consignment account debtor to bank. So consignment to bank expenses 10,000. That's all. Now during transit, in transit, 500 pounds, 50 tins. 50 tins means each tin contains 10 pounds. One tin contains 10 pounds. So 50 tin contains 50 into 10, 500 pounds. So 500 lb of oil was destroyed. That is abnormal loss. Now we'll calculate the value of abnormal loss. Cost of 500 lbs destroyed. 500 into 2 rupees cost per unit. So 1,000. Proportionate direct expenses. On 40,000 pounds, how much direct expense he has incurred? 10,000. So for 40,000 pounds, 10,000 rupees direct expense. For 500 pounds, how much? So 500 by 40,000 into 100, 125. So add up, 1,125 is the value of abnormal loss. So entry will be abnormal loss account debtor to consignment. Abnormal loss account debtor to consignment. So consignment account is created by abnormal loss, 1125. Now the remaining stock is received by the consignee. Consignee spent expenses. How much expense they have spent? 6,400. The details are given in the problem. Totally 6,400 is the expenditure incurred by consignee. Entry: consignment account debtor to consignee account. Consignment account debtor to Chatterjee account. So consignment account is debited, Chatterjee account is credited 6,400. But before that, Chatterjee has accepted the bill and returned the bill to Ramesh Oil Mill. So Ramesh Oil Mill has drawn a bill on Chatterjee for advance, and Chatterjee has accepted the bill and returned the bill back to Ramesh. So it is bills receivable. The entry will be bills receivable account data to Chatterjee account. Bills receivable account data to Chatterjee account. The Chatterjee account is credited by bills receivable 20,000. Right? Now, Chatterjee has sold the goods, sold the oil, 35,000 pounds. 35,000 pounds oil has been sold at rupees 3 per pound by Chatterjee. So entry will be Chatterjee account data to consignment. Entry Chatterjee account data to consignment. So Chatterjee account is debited to consignment sales 1,05,000. Now consignment account is created by Chatterjee account sales 1,05,000. Right? Now commission. One more sale. The remaining stock, after selling this 35,000 pounds, some stock was remaining, and that remaining stock was also sold on credit. Was sold by Chatterjee on credit. So when it is sold, again entry will be same, Chatterjee account data to consignment. The remaining stock was sold for rupees 19,000. So entry will be Chatterjee account data to consignment. So Chatterjee debit side to consignment. Consignment credit side by Chatterjee 19,000. Now commission. Commission is 3% normal commission, 3% del credar commission, 6%. So 6% of total sales. How much of the total sales? First he has sold the oil for 1,05,000. The remaining stock also he has sold for 19,000. There is no unsold stock now. The whole consignment was sold. There is no consignment stock. Right? So total sales 1,05,000 plus 19,000, 1,24,000. So 1,24,000 into 6%, 7,440. 7,440 is the commission. Entry will be consignment account data to Chatterjee account. Consignment account data to Chatterjee. So consignment account debit side to Chatterjee account 7,440. And Chatterjee account credit side by consignment 7,440. That's all. We have completed all the entries. Now we'll find out the balance profit. Credit side total 1,25,125. From 1,25,125 deduct 1, 2, 3, 4. These 4 values you deduct. 21,285 is the profit. Profit on consignment. Because credit side is more. So what is entry? Consignment account data to profit and loss account. So consignment account should be debited. So debit side to profit and loss account. Balancing figure profit. That's all. Consignment account over. Now it is given in the last line of the problem that Chatterjee has settled the account with Ramesh. That means whatever is the amount due to Ramesh, Chatterjee has sent a bank draft. So we'll find out how much is the balance. So debit side 1,05,000 plus 19,000, 124. From 1,24,000 he will deduct his expenses, advance. Already advance bill he has given 20,000. Deduct 20,000. Minus 6,400. Minus 7,440. The remaining balance is 90,160. This is the balance amount due. And it is sent to Ramesh through bank draft. So Ramesh has received the bank draft. So entry will be bank account data to Chatterjee account. Chatterjee has settled the account. Chatterjee has sent a bank draft to Ramesh. So Ramesh got the draft. Bank account data to Chatterjee. So by bank 90,160. Balancing figure. Final amount received. That's all. So we have completed the ledger accounts in the books of Ramesh and Company Consignor. Now I am coming to the consignee. Consignee will not open any consignment account. He will open only one account, that is consignor's account. What is the name of the consignor? Ramesh. So books of Chatterjee Consignee, Ramesh, consignor account. And one more account, commission account. Because there are some bad debts also. So Ramesh, first of all, when he receives the consignment, when he receives the goods on consignment, he accepted the bill. The bill was drawn by Ramesh. It is accepted by Chatterjee. So it is a bills payable. It is bills receivable for Ramesh and bills payable for Chatterjee. Entry will be Ramesh account data to bills payable. When he accepts the bill, the entry will be Ramesh account data to bills payable. So Ramesh account is debited to bills payable. To bills payable advance 20,000. 20,000. Now he incurred some expenses, 6,400 rupees expenses Chatterjee has incurred. The bank account should be created. For whom he has incurred the expenditure? For Ramesh. Ramesh account data to bank. Entry will be Ramesh account data to bank. So to bank expenses. Now sales. Chatterjee has sold the oil, 35,000 pounds of oil he sold for 1,05,000. So entry will be bank account data to Chatterjee account. He will debit bank account because he is receiving the money. But this money belongs to Ramesh. So entry will be bank account data to Ramesh. So Ramesh account is created by bank. Sale 1,05,000. Now remaining stock. The remaining stock was sold to a customer. His name is X and Company on credit. When it sells on credit, there is no bank account. The entry will be debtors account data to Ramesh and Company. If it is sold for cash, bank account data to Ramesh. If it is sold on credit, debtors account data to Ramesh and Company. So Ramesh and Company is created by debtors, credit sale 19,000. Right? Next entry is expenses. Expenses already over. Commission. Commission entry. How much is the commission due? Already we have calculated 7,440. Entry will be Ramesh and Company account data to commission account. So Ramesh and Company debit side to commission and commission account credit side by Ramesh and Company 7,440. That's all. Now remaining balance is sent to Ramesh by bank draft. So Chatterjee has settled the account of Ramesh by sending the final amount. How much final amount? Take on the credit side 1,24,000 minus 20,000 minus 6,400 minus 7,400. 90,160 is the final amount to be sent to Ramesh. So entry will be Ramesh account data to bank. Entry will be Ramesh account data to bank. So Ramesh account debit side to bank, balancing figure over. The account of Ramesh is closed. Nothing is due to Ramesh. Now bad debts. Chatterjee has incurred bad debts of rupees 9,500 because Chatterjee has sold the goods to X and Company for 19,000. But X and Company became bankrupt. Only 50% is recovered. Remaining 50% is bad debts, loss. So that bad debts will be charged to commission account. Bad debts will be charged to commission account. So entry will be commission account data to bad debts. Commission account data to bad debts. So commission account debit side to bad debts 9,500. Now in this problem, he got a commission of 7,440. But he incurred a loss of bad debts of 9,500. So he is incurring a net loss on this consignment. On account of this consignment transactions, Chatterjee is incurring a loss. He is getting a gain of 7,440 and incurring a loss of 9,500. So ultimately there is a net loss to Chatterjee from this consignment. How much net loss? 2,060. Debit side 9,500, from 9,500 deduct 7,440. So 2,060 is the net loss incurred by Chatterjee. So entry will be profit and loss account data to commission account. Profit and loss account data to commission account. So credit side by profit and loss account loss 2,060. So this is the end of problem number 17. Come on, now we'll start the last and final problem on consignment account, problem number 18. See carefully the last problem. Mohan consigned 400 packets of lipsticks, each packet containing 100 lipsticks. Cost price of each packet was 300. So Mohan is the consignor. He has sent some goods to the consignee. The goods consist of 400 packets. Each packet costs rupees 300. So 300 into 400, 1,20,000 is the value of the goods consigned. 400 packets, each packet cost rupees 300. Mohan spent rupees 50 per packet as cartage, freight, insurance and forwarding commission. So every packet 500 rupees. So how many packets he has sent? 400. So 400 into 50, 20,000 rupees he has spent. 400 packets he has sent. Each packet 50 rupees direct expenses. So 20,000 rupees direct expenditure incurred by Mohan, consignor. One packet was lost on the way and Mohan lodged claim with the insurance company and could get only 270 as claim on average basis. So there is abnormal loss. During transit, one packet was lost. An insurance company has paid the amount of rupees 270 to the consignor. That means out of 400 packets, one packet lost in transit. So 399 packets are received by the consignee. The consignee took delivery of the rest of the packets and spent 19,950 as other non-recurring expenses and 11,250 as recurring expenses. So consignee is spending non-recurring as well as recurring expenses. Then he sold 370 packets at the rate of 6.50 per lipstick. Per lipstick for one piece. So how many pieces are there? 400 packets into 100 means 40,000 lipsticks he has sent. But he has sold 370 packets. Each packet consists of how many lipsticks? 100 lipsticks. In one packet, 100 lipsticks. How many packets? 370. So 370 into 100 will get 3,700. So 3,700 lipsticks are there. Each lipstick was sold at 6.50. He was entitled to 2% commission on sales plus 1% del credar commission. So 3% is a total commission percentage to consignee. You are required to calculate the cost of stock at the end. That means what is the consignment stock, value of unsold stock, and cost of abnormal loss. What is the value of abnormal loss? And the profit or loss on consignment. Ultimately, we have to make a consignment account to find out the profit or loss. It's not at all difficult. It's very easy because after doing so many problems, we have become acquainted regarding how to proceed with this type of problem. Almost every problem, the same provisions are there. First of all, the consignor Mohan has sent 400 packets. Each packet 300 rupees. Each packet 300 rupees. So 400 into 300, 1,20,000. So when goods are sent by consignor to consignee, entry will be consignment account data to goods sent on consignment. So consignment account debit side to goods sent on consignment, 1,20,000. 400 packets. Each packet cost price 300. First entry completed. Now after sending, he has spent 50 rupees per packet. 50 rupees per packet on freight, insurance, cartage. So 50 into 400. 50 into 400, 20,000. So 20,000 rupees are spent by Mohan, consignor. Entry will be consignment account data to bank. So consignment account debit side to bank expenses 20,000. Right? Now, during transit, one packet was lost. What is the cost per packet? 300 rupees. The cost of one packet is 300 rupees. So we'll find out what is the abnormal loss. So here, value of abnormal loss. The cost of one packet lost in transit is 300. And per packet, how much is the proportionate direct expenses? Because abnormal loss took place in transit. That means before reaching the place of consignee. So we will not include the non-recurring expense of consignee. We'll include only the expenditure incurred by the consignor. So consignor has spent 50 rupees per packet. The consignor has spent 50 rupees per packet. It is given in the problem. So one packet is lost. One packet is lost. So per packet, how much is the expenditure? 50 rupees. So we add 50 rupees. Proportionate direct expense 50 rupees per packet. Expenditure incurred by consignor. So 350 rupees is the value of abnormal loss. What is the entry? Abnormal loss account data to consignment account. Abnormal loss account data to consignment. So consignment credit side by abnormal loss 350. Right? Now sale. Now how many packets are sold? 370 packets are sold by the consignee at rupees 6.50 per lipstick. So 350 or 370 packets are sold. Each packet consists of how many lipsticks? 100 lipsticks. So if you multiply 370 into 100, so you will get 3700. 370 packets. So 370 into 100 lipsticks into 6.5. You will get 2,40,500. The one lipstick sale price is 6.5. How many lipsticks are there? So each packet contains 100 lipsticks. How many packets are sold? 370 packets. So 370 packets into 100 lipsticks. 37,000 lipsticks. 37,000 lipsticks. Each lipstick sale price 6.5. So multiply 2,40,500 is the sale. What is the entry for sale? Consignee account debtor to consignment. Consignee account debtor to consignment. So consignee account is debited to consignment sale 2,40,500, and consignment account is credited by consignee sales 2,40,500. Sales over. Now expenses incurred by consignee. So consignee has incurred non-recurring expense as well as recurring expense. Non-recurring expense are 19,950 and recurring expense are 11,250. If you add up both, you will get 31,200. So 31,200 is the total expenses paid by consignee. So entry will be consignment account debtor to consignee account. So consignment account debit side to consignee expenses 31,200, and consignee account is credited by consignment 31,200. Now commission. It is given 2% normal commission and 1% del credit commission. So total 3% on sales. How much are the sales? 2,40,500. So here you can see 3% of 2,40,500, 7,215. The 7,215 is the commission. Entry will be consignment account debtor to consignee account. So consignment account debit side to consignee account commission 7,215. Consignee account is credited by consignment 7,215. 7,215. That's all. Now lastly, we have to find out what is the value of the unsold stock. Now carefully you see, the main complication lies here in calculating the value of the value of unsold stock. Value of unsold stock. Actually, how many packets have been sent originally? Starting 400 packets are sent. So total number of packets sent is 400. Out of 400, one packet was lost in the transit. So less number of packets lost in transit 1. Deduct 399 packets. So 399 packets are received by the consignee. So number of packets received by consignee 399. Number of packets sold. How many packets are sold by the consignee? 370 packets. Already we have taken here. 370 packets are sold. So deduct 370. So remaining number of packets unsold is 29. 29 packets of lipsticks are unsold. We have to find out what is the value of these 29 packets unsold. So what is the cost price of each packet? It is given in the problem 300. The cost of each packet is 300. So what is the cost of 29 packets? The cost of 29 packets remaining unsold. 29 into 300, 8,700 is the cost. To this we have to add proportionate direct expenses paid by consignor and also by the consignee. So first of all, we will take proportionate direct expense paid by consignor. Consignor has spent 50 rupees per packet. It is given in the third line of the problem. The consignor spent 50 rupees per packet on freight, cartage, insurance per packet. How many packets are there? 29 packets. So 29 into 50, 1,450 is the proportionate direct expense of consignor. Now consignee. Consignee has spent non-recurring expenses 19,950. We are not considering recurring. We are considering only non-recurring. Non-recurring is 19,950. So this 19,950 he is spending on how many packets? 399. Because out of 400, one packet was lost in the transit. By the time the transaction is completed at the consignee, only 399 have been received. So on 399 packets, he is spending 19,950. So here you can see consignee. For 399 packets, 19,950 is the non-recurring expense. But how many packets are remaining unsold? 29. For 29 packets, how much? So 29 by 399 into 19,950, it comes to 1,450. Now you add up 8,700 plus 1450 plus 1450, 11,600. So 11,600 is the value of unsold stock. So what is the entry? Consignment stock account data to consignment. Consignment stock account data to consignment. So consignment account is credited by consignment stock account 11,700. That's all. So we have completed all the calculations. Now we can find out the profit on consignment. So credit side, all these three values are ticked here. Take the total. 2,52,450 is the total on the credit side. From 2,52,450 deduct 1,20,000, 20,000, 31,200, 7,215. The balancing figure is 74,035. 74,035. This is the balancing figure. This is the profit on consignment. Because credit side is more, debit side is less, there is a profit. So what is the entry? Consignment account data to profit and loss account. The consignment account is debited to profit and loss account 74,035. Balancing figure profit. That's it. Now how much is the amount due from consignee? Debit side total 2,40,500. From 240,500 deduct 331,200 deduct 7,125. The 2,02,085 balancing figure. By balance carried down. Consignee has not settled the account. Consignee has not sent the final amount. It is still due. That's why by balance carried down, balancing figure. So to balance brought down 2,02,085. That's all. It is asking you only to find out the profit on consignment, to find out the value of abnormal loss, to find out the value of unsold stock. Only these three items are asked in the last line of the problem. So all the three I have completed. So at last 18 problems, main problems. 18 main problems and 8 short problems I have completed on consignment. I have put my maximum effort in explaining each and every point on consignment. So if you think that your knowledge has increased by watching these videos, if you think that these videos are very, very helpful to you in understanding the concept of consignment account, it has increased your knowledge. If you think so, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. Share my channel and also please subscribe my channel if you have not yet subscribed. Apart from this video, this subject is financial accounting 2. Apart from this, I have uploaded different subjects for different students for graduation, post-graduation and professional studies. I have uploaded advanced accounting, cost accounting, corporate accounting, advanced corporate accounting, managerial accounting, and income tax, business statistics, financial management, investment management. Many more subjects I am going to upload in future too, inshallah. So do visit the playlist, select your subject, whatever subject you want, select the subject, watch the video completely till the end. Definitely you will definitely your knowledge will increase. You will get good command, you will get confidence on your subjects. So all the best and thank you for viewing my videos, and I'm getting so many subscribers, so many viewers. I'm very thankful. Your liking of this channel only gives me more enthusiasm to provide you more and more videos. So okay, we'll continue inshallah next topic in the next video. All the best, take care.